Ever watch the suspense build up during a tense movie scene? Monitoring economic indicators for real estate is just as nerve-wracking, predicting the market's health and future movements. Understanding the economic indicators relevant to industrial real estate is crucial for investors aiming to make informed decisions. These indicators are like the pulse points of the economy, revealing the strength and potential challenges in the market. Let's dive into the key metrics that every savvy investor should keep an eye on. Number 1, GDP growth rate. The GDP growth rate is like the heartbeat of the economy. It measures the pace at which a country's economy is growing or shrinking, directly impacting industrial real estate demand. A rising GDP often signals increased manufacturing and retail activities, boosting demand for both warehouses and distribution channels. Number 2, unemployment rate. Think of the unemployment rate as a mood indicator for the economy. High unemployment can signify economic trouble, potentially reducing demand for industrial spaces as businesses contract. Conversely, low unemployment typically indicates a robust economy with more goods being produced and stored, benefiting industrial properties. Number 3, interest rates. Interest rates are like the economy's thermostat. Higher rates can cool down investments by increasing borrowing costs, while lower rates can heat up market activity by making financing cheaper. Keeping an eye on interest rate trends helps investors predict the cost of capital and its impact on investment returns. Number 4, consumer confidence. Much like a relationship's stress level, consumer confidence reflects how optimistic or pessimistic consumers are about the economy's future. High confidence leads to more consumer spending and increased demand for goods, directly affecting the industrial sector through greater need for distribution facilities. Number 5, manufacturing activity. Monitoring manufacturing activity is like checking the economy's work ethic. Metrics like Purchasing Managers Index, PMI, indicate the health of the manufacturing sector. A rising PMI suggests expanding manufacturing activity, which can lead to an increased demand for industrial spaces, particularly factories and assembly plants. Understanding these indicators provides investors with a comprehensive view of the market dynamics and helps forecast potential shifts in the industrial real estate landscape. Now that you know what to watch for in the economy, are you ready to assess the risks? Join us next time as we explore risk assessment in industrial real estate investing. It's like knowing what kind of roller coaster ride you're strapping into. Don't forget to like, subscribe, and turn on notifications for ECMP Studios. If you have insights or questions about economic indicators, share them in the comments below or reach out to us directly. We're here to help you make sense of these numbers. Let's keep learning, keep planning, and as always, keep it real. Stay